Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to the July 17th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the Ever Ag Insights team. What we do here is break down the latest from the NDPSR report. Let's start with butter. This butter number coming in at 313.08 is about a half cent under the CME 1 week average of 313.56. Now that was the high week at the CME, so you would expect lower than normal basis. Our normal basis is of course 2 cents over. So minus a half negative basis, a little bit of a surprise and definitely qualifies for lower than our expected basis. Part of the problem might be the 22 loads that we traded on the CME last week. Those prices are reported at the CME price minus freight. So that probably goes a long way to pull the weighted average down. Maybe even had more of an influence because look at this volume, very light volume on the NDPSR, just north of 2.2 million pounds. So about 1,200,000 under our expected volume level. So with that light volume on forward contract sales, the volume at the CME even carries greater weight, and that is a recipe for lower than expected basis on this week's report. Up next is cheese. We'll start with the blocks. 193.97 is this week's NDPSR release, and that is a big price. Plus 5 to the CME 1 week average of 189.25. Now, the block weekly average moves higher throughout the July pricing. This is, of course, week 2 of the July pricing. We're up a little bit. Plus 5 is higher than our expected basis. We would expect anywhere from a 2 to 4 cent positive basis. And what is a surprise, because basis has been running high in the block as of late, and the volume has been low. This week, the basis is plus 5, higher than expected. And we actually have some volume. Not quite the 12 million pound expected level, but just a little bit short, only about 40,000 pounds under. So with the volume here north of 11.9 million, we have big volume relative to recent weeks and an outsized basis, certainly a win for the block on this week's NDPSR report. And that theme carries over to the barrel, 196.55. That's a plus 7.5 to the CME 2 week average of 189.07. So the CME weekly average using the 1 week average for the block and the 2 week average for the barrel, essentially a parity. Outsized basis in the barrel, 7.5 over, gives you a 2.5 cent premium barrels over block. So once again, the strength in the barrel continuing to move the cheese average higher. This is a run of a few months now where we've had the barrel over. So a lot of price positivity in the barrel. Continuing, what is new this week is look at this barrel volume, 13.3 million pounds. So again, higher than expected basis on almost our expected volume, but compared to recent weeks, 13.3 is just a deluge of barrel volume. Just a massive amount. Still coming in 150,000 pounds short of our expected 13.5, but compared to recent weeks, as I mentioned on the last report, we've been running under our expected volume since mid-April, and this could be the first sign of a comeback on these barrel sales on the NDPSR. The 31 loads that we traded at the CME last week at 191 probably helped to buoy that volume and that basis a little bit. All in all, it's a win here in the cheese complex this week, and the wins continue in whey, 44.66. Now, granted, that is a minus 4 to the CME 1 week average of 48.30. But in whey, of course, we always like to look at the prior week's NDPSR. The sales on this report were collected last week. Last week, the prior week's NDPSR was a June 29th value of 43.66. So the manufacturer was able to sell whey last week at 44.66. So a penny premium to prior week's NDPSR. And at that premium, they were able to move 5.7 million pounds. So outsized volume on this week's NDPSR report for whey and a premium to prior week's NDPSR. Looks like the manufacturer had a good week in both cheese and whey. And then lastly, non-fat, 120.07. That's a plus 1.5 to the CME 1 week average of 118.55. We traded 14 loads on the CME last week. That volume doesn't translate here to the NDPSR, falling short of 15 million pounds. So a big increase over last week's volume, a meager 9.5 million. But here at 14.8 million, still well short of our expected 20 million pounds. So the manufacturer was able to call a nice basis, but on lower than expected volume in non-fat. So this is week 2 of the 4-week July pricing cycle. Currently getting a July class 3 of 1984 and a July class 4 of 2135. If you carry current CME equivalents out through the entire August 5-week pricing cycle, we get an August class 3 of 1970 and an August class 4 of 2120. We'll see what they have in store for us for the remainder of the August pricing at the CME. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. We'll see you next week. Bye.